Hello everyone, welcome to our webinar today. I'm just going to wait for a couple more minutes to let a few more people join and then we'll kick off. I can see we have a couple more people dialing in. Just to let you know, we're just waiting a minute or two more and then we'll get started with this. Great. I think we'll get started. I can see we've got a few people on the line. So welcome everyone to our webinar today. Our topic is regulation, innovation, and financial services, leveraging new tech for better KYC. So my name's Neve. I'll be hosting the webinar today, and our speakers are Parker Croxford and John Betcher. So Parker has over 10 years in the technology, finance, and commerce industries, among others. He has been a critical player at some of the top startups in the US and the UK. Parker joined on Fido in the spring of 2016, and he now works closely with the co-founders to drive change in financial services and open new frontiers into RegTech. And speaking with Parker today is John Betcher. John provides a wide range of regulatory and compliance solutions for financial services, fintech and cryptocurrency firms. He was most recently General Counsel and Chief Compliance Officer of Circle Internet Financial, Inc., a global crypto finance company that is seeking to help change the global economy. So in the webinar today, we'll cover a few topics, including how new regulations are driving disruption, how financial services can leverage new technology to help meet that challenge, and the do's and don'ts of how to get this right or wrong. We'll take your questions at the end, so please feel free to add those into the box, and I'll offer them to our presenters at the end of the presentation. And in the meantime, you can feel free to check out the attachments and links for more information on all the topics we'll be covering today. So I think with that, we can get started. So one of the key challenges that our guests today and in financial services in general are facing is changing regulation. So can you both, and I think Parker, we can start with you, can you talk us through why that landscape is changing and seeing so much kind of turbulence at the moment?
Yeah, so I think there's a couple trends and different pieces that are happening that are, one, increasing the concerns around privacy and data protections. This is coming from how which you see with GDPR has come in Europe, which has changed the way that companies can deal with clients' data. And also, there's trends here in the U.S. With California passing a privacy bill that'll be coming into action next year, and then also with Congress passing the Mobile Act, which we'll talk a little bit more about later. But John, want to add anything to sort of trends or things that you're seeing when it comes to why this is happening across the U.S. and Europe?
Yeah, I mean, there's a lot of changes globally. Certainly there's a focus on, the emerging technologies. The regulators are always having a difficult time staying ahead of the technologies, and having spent the most recent few years in the cryptocurrency space, it really kind of underscores the challenges, both from a regulatory perspective and from a compliance perspective. But in terms of privacy and data protection, yes, I think GDPR was a bit of a game changer, and now I think I think we in the U.S. have a little catching up to do, and there's been calls, or recently, from folks like Apple and Google to have similar standards. I think it's not just privacy; it's across the board. It's all other regs that are impacting financial services like AML, and just really trying to adapt to emerging technologies and the way we look at the risks that are presented.
Sure. And I know that some of these regulatory changes are coming because essentially the ways that we currently prove and protect our data and identities online is broken, and the SSN, I think, is a sort of case in point there.
Yeah, no, look, this is something that the Unfido's part of something called Better Identity Coalition, and the SSN has become a unique identifier in the U.S. where it used to be a secret. And I like to tell the story of in the 1950s, there used to be a game show here in the U.S. that you would get a someone on stage and you do 20 questions around the interview, why that person was famous. And the first woman to receive the first SSN, which was just all ones, was why she was there. The celebrities couldn't actually guess why she was famous, and they put her SSN up on the TV screen in the 1950s. And the challenge with all that was, at that point in time, all the worst that could have happened is someone could have used her SSN to actually pay into her retirement fund. Whereas now today, that is being used across many industries to be that identifier. Everything from I can log into multiple different platforms, and I either can have that unique ID number that they try to provide, or the SSN is also that same piece. And so it's not as unique and challenging. And then on the flip side, 7 years ago, all SSNs were anonymized. And so there's a huge problem in the market today with, synthetic IDs of I find a new SSN, I can then start creating a profile around that with a different name, address, and everything, and it creates a major headache for the financial institution. So I think there's this driving change now for with the U.S. market to have to sort of wean itself off of the SSN. And some interesting things happening on the Hill right now, where the outgoing chairman of the Ways and Means Committee is actually put out a draft of a bill where he wants to advocate to actually publish all the SSNs in the next 5 years in the U.S. and actually force all industry to put sort of a cliff for them to wean themselves off their dependency on the SSN. So there seems to be great movement around this. But John, from your perspective, SSN's a very U.S. focused piece here. How much did you use it when your time at Circle, and some of the clients that you're consulting with? Is this a piece where you're telling them don't build your platform around an SSN being a unique identifier in their platforms?
Yeah, absolutely. I mean, you look at, my background is in more traditional financial services and banking, and the traditional way of doing KYC has really gone by the wayside. So the SSN, or collecting documentary evidence of identity, social security number, name, address, date of birth, all those things are fraught with risk and have led to the rash of identity theft that continues to occur. So really, when you look at doing KYC now, it's more in terms of understanding the digital fingerprint, looking behind and using data and using other tools and devices like geolocation, IP address, and things like that, social media, and the data points. But that obviously cuts both ways. One, it helps identify folks, but it also causes concern from a regulatory perspective. But I mean, certainly, the social security number too is also limiting, in terms of identification, in terms of being able to serve, certain geolocations and others that don't have those types of identifiers. And I know that's been a concern in terms of being able to reach underserved and unbanked communities as well.
Yeah, I mean, the slide we have up now is, is sort of one of the other sort of macro trends that has made the SSN invalid, and sort of, let's say, knowledge-based questions. I was in D.C. about a month ago at a cyber security piece with the Better Identity Coalition, and Aetna and several others are trying to kill the password and knowledge-based authentication. It's a piece where you need to be, as you're saying, moving past that idea that just because someone knows their name, their address, their date of birth, and who owns their student loan maybe, or in some other details, a lot of that is easily phishable and or is already exposed out there on the net. And so I think it plays into that, what you're saying here. You can't be dependent just on these stagnant data points any longer. It needs to become a much more dynamic view of someone's digital footprint.
And so, Parker, you mentioned some of the initiatives there that you're working on with the Better Identity Coalition and others. But could you also talk us through some of the key pieces of regulation that have, up to date, been driving this kind of change? Some more.
Yeah, no, I think, look, there's a couple of pieces that have come in. One, the piece that we've been spending a lot of time and effort around, and John, it'd be good to understand sort of where you think this is the Mobile ID Banking Reform Act that came out, which had two sort of clear pieces in it, which is driving a lot of activity on the Hill. The first one being, the fact that the bill overwrote around 24 or 26, depending how you interpret it, state laws that prevented you from capturing a government ID to onboard someone for financial services. And two, you have to then delete that image. That's obviously changed the way that the rules are being written around that, because it doesn't specify how long, and if you keep it for AML purposes, a whole series of different conversations. But also the more interesting piece is, it mandated that you have to now go directly to the SSA, which is the Social Security Administration, to validate someone's name, date of birth, and SSN. And so there's great big moving pieces sat around that currently. But couple that with GDPR, and then now people actually wanting to understand the NIST standards, which have been out there for a very long time. It seems to be this moment of where digital identity people actually care about, and changing, because you're not coming into banks. Things are in a little bit of upheaval. But wanted to just from your perspective, John, are there any other pieces out there that are changing that sort of those macro trends?
Yeah, no, I think it's, it really is a consumer protection issue. It's a financial inclusion issue. And I think it's something that really, the issue of privacy is something that we really need to crack, both from a practical standpoint and a regulatory perspective. But, and that's where really, I think, the possible use of blockchain technology also can help, just because it's a decentralized technology. So it's a digital ledger where you can, track and verify the legitimacy of individuals, and it's also not have the ability to be, tampered with by third parties. And so I think some of these things, going forward, I think there's a real opportunity here to make changes. And in the interim, the way that we look at this, both from an onboarding perspective, if you're in a financial institution, there's definitely a lot of additional and new and interesting ways to identify and onboard folks.
Yeah, and so that brings us nicely on to the next section of the webinar, I think. And John, you mentioned a little bit there, but perhaps you could talk us through some of the other new innovations in technology that are helping financial services businesses and some of the people that you work with actually meet these challenges and tackle these problems.
Yeah, I mean, the term, RegTech, everyone's heard of it, but it's really, there has been a kind of a wave of changes in terms of, looking at and being able to, as much as these businesses are disrupting financial services and bringing good use cases to the customer and making the distribution of, payments and lending and other things easier for the consumers, the technology has also been able to help folks mitigate risks. And so, breaking this down in pieces, but as I mentioned earlier, really being able to look behind and use the data to give you actual better understanding of who your customers are in the front end, reviewing transactions, being able to use artificial intelligence and machine learning tools, and to understand behaviors, to understand patterns. But really on the front end, to be able to give you a real source of information, like I said, and information that you can get behind the scenes without disrupting the consumer experience, which is important as well. And so, as I mentioned, things like IP address and geolocation and device ID and things like that can give you real flags, potential red flags if you have high-risk customers, locations, and things like that. And it's not only, it's really been eye-opening both from as a kind of compliance professional or working with different companies, but as well as the government and law enforcement. So law enforcement, having spent a lot of times looking at trends in emerging areas such as blockchain and cryptocurrency transactions, and the ability to provide information through suspicious activity reports or information on, in terms of the course of investigations, the amount of data points that you can provide is night and day from what they've seen in the past.
And so I think with all of this new technology, the key conundrum that we're trying to solve here is not adding too much friction for the user, but still maintaining this high level of security. And I think one of the sort of big buzzwords that's out there a lot is machine learning and or AI. So perhaps, Parker, you could give us a little bit of clarity on exactly what the difference is and how actually businesses can implement this kind of technology.
Yeah, no, I think it's, I think AI, machine learning, and, has come on in leaps and bounds. And I think there's some reasons for that. And the first piece is, it takes a lot of computing power, and the fact that, the cloud has become such an arms race, and that infrastructure has become so much cheaper, and the market allows for a lot more companies to do this at scale, at a relatively low cost, whereas maybe even, a couple of years ago, you're having to buy your own server racks and go through that whole process. And so for what I find really interesting, you have sort of two sides of the coin of when I look at sort of, let's say, an AML KYC onboarding, you have that CDD, that, customer due diligence up front, and then you have that, the back end transactional monitoring, and that back end is really starting to see sort of efficiencies and leaps and bounds. I think PayPal came out and talked about how much a huge percentage of more sort of fraud they will be able to pinpoint just because machines can churn through that data, see the patterns, and pick up on things that humans have the problem with. And then on the front end, not only the technology with Onfido, what we do, it's that bit where you can take the human to scale, and allow that machine to just churn through a huge amount of data, and then put an expert in the position to make a call on things. And so it's really about making companies much more efficient, and providing this machines and these rules and this sort of human-assisted piece to allow the humans to reduce a lot of the white noise and to focus in on the pieces that matter. And so, the stuff that we're always having conversations around is, with this problem, you're going to have sort of tensions being pulled on a service where if you want everything done really quickly, you're going to lower your ability to do high pass rates and fraud accuracy, because that stuff takes time. And it's just this continuous sort of ongoing conversation of how to get the most out of what is a very exciting period of time with the amount of computing power we have at our fingertips, thanks to the fact that you can get a server spun up somewhere in a matter of seconds for relatively low cost.
And another technology that I think we're seeing a lot of at the moment is biometrics. So could you give us a little highlight on how that actually fits into this stack as well?
Well, I feel like biometrics is turning into the new buzzword, and and for us, biometrics have a very powerful place to be, because it's something that who we are, right? It can be your voice, it can be your fingerprint. Obviously, it's your face, it's your retina. It's all these different pieces that are unique to you. And the challenge that we see in the market and the pieces that we try to help our clients get to is, you have all this wonderful information from your digital profile, but how do you pin that to a carbon-based human? And pinning it to that carbon-based human, you have to have a reference point. And, that reference point for us really sits with that government ID, because you've been vetted somewhere. Some of the regulations that come across when it comes to the Real ID Act in the U.S., where, that was a sort of federal backhanded way to create a national identity card, being your driver's license, and putting the DMV into that position, that you still need to be able to confirm that is my thumbprint actually my thumbprint, or did someone steal my digital identity or my digital footprint, and now they're running around as me. But it sort of tacks into the other direction that biometrics can also be incredibly dangerous. If anyone talks about putting your image of your face or a biometric onto a blockchain, that just makes me recoil, because that, again, sensitive information comes really down to the privacy pieces, and Apple, doesn't allow that to leave your device. You have the FIDO Alliance as well that really talks about the standards of how to do some of this credentialing. And I think it's all moving into this world that's going to allow us to have a lot more convenience, like getting the privacy correct and all these other pieces, I think it's going to be a pretty interesting challenge for us. But for John, for you, at Money 2020, I felt like behavioral analytics was the new buzzword, but these other trends are happening in the market. What are those pieces that you're seeing?
Yeah, no, I think biometrics is an interesting area. I think it's also one thing, if you're developing these systems, you really need to understand what the consumer attitude is and the behavioral piece of that, because on one hand, some folks are going to like biometrics and feel more security and feel it as though, especially when dealing with a financial services type of application, they may like that. On the other hand, there may be the worst thing you can have is to make more friction into your onboarding process and have someone just abandon because they find it too difficult or they're not comfortable going through a certain process. So typically when we're setting up certain types of onboarding processes, we kind of look at it in a few different buckets. One bucket is, based on the data points that we talked about and the other tools that we have in machine learning and AI, we have a bucket that will automatically accept customers. The other will be kind of an automatic rejection because there's just too much red flags. And then you have that in between where you could potentially run additional tools through the system and utilize the biometrics and others. I would also say on the machine learning piece, some of the areas there, again, the technology is very compelling, but again, it's just really as good as you program and set it up. And some of the challenges there are just making sure that you have ongoing monitoring of that and continually making adjustments and advancements in that area. And the other issue that you often have with the data is that you have really good data, but it's not. You have systems that aren't talking to each other, or not connected, or there's no link, there's no API, and so being able to really utilize the full resources and power of the machine learning tools is important when you're setting up your program.
Mm-hmm. I think that's really good advice, and that actually brings us on to the next section of the webinar. A few more facial biometrics trends here.
No, there's one trend that I wanted to throw out there, and I think you're talking about the friction and those other pieces, but the deep fakes or the spoofing of a video now, I think, is also a very interesting piece.
Mm-hmm.
We've all seen the video of Obama saying horrible things, and how that's being manipulated. So, it still starts to feel like an arms race against the fraudsters and everything else to sort of stay out ahead of them. And it's one of the ones we're looking at a lot as well, but because it's getting more sophisticated by the day.
And there is, for all of our audience, there is more detail on some of these technological solutions in the attachments and links, so do go there to find out more. And so then I think the most interesting thing for the people on this webinar today will be to hear from you both about kind of what are the common mistakes that need to be avoided and kind of best practice for getting this right. And I know that, as we said before, UX is a really important part of it, and kind of the timing of where you add in this friction can be really key.
Yeah, so for us, it's a big conversation that we're having a lot, and it's coming down to the way that we talk to our clients and talk about best practices. Is really coming down to how to manage expectations for customers on when it comes to what we're calling active waiting. And the examples of some of the stuff of managing expectation is, there is a lot of psychology around this, and for example, Disney is incredibly good at this with keeping you distracted in lines at their amusement parks. But more importantly, and hopefully I don't ruin this for everyone on the podcast, but they'll tell you how much longer it is to get to the ride, and so they'll be like, you're 45 minutes away, but in reality you're only 30 minutes away. And so you get there and you feel like you've had this win of you got there 15 minutes early. And the same sort of psychology is, Moscow's been going through this huge sort of renovation of trying to make it a more livable city, all these series of different pieces. And there was a really sort of an interesting part of an article I was reading was saying that one of the biggest things that they changed was when when a train left the metro, they used to tell you how long since the last train left. So the time was always going up. And so it had this very negative impact of people who were viewing that, whereas they made a simple change and actually turned it to how long until the next train arrives. And so that countdown actually psychologically made you feel like time was actually going faster instead of going the uncertainty of you have no idea, and you could just see the time going on and on and on. And so when you're adding, at times you have to add friction into your user experience today because you can't have the same level of dependency on data and that digital footprint that we could a year ago, 2 years ago, some of the trends that we're talking about, that you need to start putting in sort of, document verification, these other pieces, and you need to help manage the expectation, say, like, this is about to happen, get your ID ready, help with all the cues for that user to go through that, where you'll start to see a much higher sort of completion rate of them going through it when you have it more managed. And then also, as you're waiting for those completions to happen, you're educating them, or you're getting them into a place that allows them to have an active sort of piece where they understand that this is not going to be instant. This could be up to 5 minutes, and it's that it really helps the whole conversation through the process. And so it's an interesting piece out there to help ways to improve it. And then the last piece before, John, I'll let you sort of talk about some of the things that you see in the market is, this will come to track. You don't have to do a deep verification of all your users. Put it in a place where you have that user invested in your service. They've already given you other information. They're already invested in the app, and put them in a position where it's that final step and they have motivation to complete that level of friction, or give them other reasons why, positive reasons why, to raise their hand and verify themselves. And we have, clients that, offer more services or provide other perks to the users that do that. And so again, it's giving them a positive reason to go through, or they're so invested in your service, they have to do it. I used to run a payment company, and we had 30 days to underwrite our merchants, and we wouldn't allow you to settle out of your merchant account until we had you fully verified. And it's amazing how quickly people get the information that you want from them when you tell them they can't have their money. It's a great motivator. So I wouldn't necessarily do a hostage situation, but something similar helps. Yeah.
And John, from your point of view, where have you seen these things done well or badly?
Well, I guess I have, just 3 pieces of advice. So one, in terms of the bad, is not making the investment or not taking the time on the front end to do things the right way. And so, I think we now have a lot of compelling technologies, and if you make the investment, you take the time, you actually will be more efficient on the back end. And so what may seem like quite a bit in terms of allocating capital and resources ultimately is going to be more efficient from both a regulatory compliance standpoint, but also from a business standpoint in the long run. And so it's much different than what I've had in previous traditional financial services arena, where you tend to just throw bodies at the problem. Here you can do a lot more from the technology perspective. The second piece is really you need to, because of the global nature of these businesses and transactions, is that you really need to have an understanding or have an ear to the ground in terms of the regulatory changes. And there are quite a bit of shifting winds from that perspective. And there are jurisdictions you may operate in which have different types of requirements, and that could have an impact on how you onboard or how you interact with your consumers or your clients or your customers. And to the extent possible, you want to be able to minimize that impact and that friction to that experience. And also you want to minimize the having to have lots of different types of systems in a number of different geos. And I think the third piece really is not is remembering to always take a risk-based approach to all these things. And so it depends really on what types of products and services you're offering. Who are your target clients, and what locations you're operating in. And so really having that risk assessment and setting up your systems to be comparable to that are really, really important, to really making sure that you're flagging the appropriate types of customers, transactions, and monitoring for the right things at the right time.
Well, that's, I think, really helpful and great to hear both of your insights. So I think we've got a few more best practice tips there that I'll just leave on the screen while we take some questions from the audience, because I know that we do have a few that have come in. So first one, for whoever would like to take it. Regulations require banks to collect SSN. Since banks can't move away from SSN until that is taken out of the regulations, are you seeing a move to change that portion of the regulation? What would you propose to replace it?
So
I would say, yeah. Go ahead, Parker. Go ahead.
No, John, you're first.
Yeah, having spent a lot of time with banks, I would just say that there needs to be more of a principles-based approach to regulation generally, which means being less prescriptive on what you need in particular to identify an individual. And so, I think, especially because of the different ways that you can do so and the emerging technologies here. So I think, getting away, I haven't heard specifically around, specific amendments to eliminate that from the regs, but I know there is more kind of a desire or receptiveness to potentially allowing institutions to look at identity in a different way on the onboarding, from the onboarding perspective.
Yeah, and I would also just jump in there. I think there's a couple things to distinguish. One, it's provided as a as that example, and you have to hold it for a variety of reasons. But I think the piece that is currently being advocated for in the short term is that needs to be removed as that unique identifier number of the individual. And so, you need to collect it, and you're going to have to go to the SSA to verify it. But then moving forward, you shouldn't be able to, part of the piece of when I call my bank, they shouldn't use my SSN, ask me for my SSN or my last four or any of those things to pull up my records. And so it's moving initially to move away from that level of dependency on it and moving into creating other unique identifiers in that process.
And Parker, I know you mentioned some of the work of the Better Identity Coalition earlier. Could you give us a bit of insight into how they're trying to help move the needle on some of this regulation?
Yeah, so I think it's a good question. The Better Identity Coalition released a blueprint. You can go to their it's betteridentitycoalition.org. You can download the blueprint policy paper that we worked together to release, and it's in essence advocating for the demotion of the importance of the SSN, and then it's putting a call out to have the DMVs become more involved in this process, because they do such a heavy vetting. They see you in person, and helping getting them stood up into a framework when it comes to their technology and their back ends and everything else to actually allow you to access. Because right now, with privacy and tech pieces, some of them are still on mainframes. You can't really access the DMVs at scale in a commercial use case. You can for federal use cases or governmental use cases, but for commercial use cases, you're not able to do that. And so I think it's really just driving the industry not to be so dependent on it, and actually get them to realize again that it's not a useful tool as it once was.
And we have another question here from the audience. With so many providers claiming that they use AI or machine learning or a variation of the two, what are the key features to look for in a provider?
Oh, John, you want to start that?
Sorry, could you repeat that again?
Sure. With so many providers claiming they use AI or machine learning, what are the key features to look for?
In terms of what types of information, I guess from a regulatory perspective, it's pretty easy. If you're a regulator or a law enforcement official and you're seeing types of reporting from various institutions, you can tell that the data that they're using are the types of systems they have. Or if you're examining an institution, it's pretty clear in terms of the way they're looking at these systems. It's not going to be very clear from just a consumer perspective, because a lot of these things are happening, obviously, behind the scenes. But in terms of setting up the systems from an AI and machine learning perspective, as I mentioned earlier, it's a lot of it it's risk-based. It's specific to what exactly you're looking to get, what you're trying to do from a business standpoint, and also the type of data that you're trying to track. And the other piece really is important to be able to have good reporting capabilities and good kind of dashboard management. So, and to be able to pull multiple parts of your organization, be able to pull this information and have it in one plain view, whether it's, we talk about the 3 lines of defense, but, all those areas be able to talk to each other and be able to configure that in a way where it's really effective.
Yeah, and to sort of piggyback on some of that stuff, I think, in this space that we're talking about, the challenges come out, one, especially if we're talking about, machine learning AI as that black box sort of negative impact on it. So if you're looking there to understand, you need to understand how that company, what data they're using to train their models and how they're using it, and sort of what sort of QA process do they have out on the other side. And so there's several different levels and layers of what you can do when it comes to machine learning. That can be human assisted. There's things where you have the machine making the decisions all by themselves as they've been trained. And so when you're looking at providers and or looking at sort of even at how you're to set up yourself, it's really mission critical to make sure that data that you're starting off with is true, and what the outcome should be. And then so when you start feeding in data that you don't, that you need that model or that AI or whatever that black box is going to be, you have that ability to sort of say, look, well, here's the control data. It's sitting out what it should be. We've had it fine-tuned. We have it QC'd, and so it really helps then to build that trust. And the more data you push through it, it should be becoming more and more efficient. And so there's some of the things some challenge points is that you have when either speaking to the provider, or even internally when you're looking, when you have your data scientist sat in a room with you and you're trying to just figure some pieces out. There's some key things to understand of how those models are being built.
Great. Oh, and we just had another question that's come through. How do you manage the friction created when you onboard in a risk-based manner, ID level based on product risk, and an existing customer now wants a higher risk product? So sometimes customers don't understand why information was collected in the first place, and if they choose not to provide additional info, it can create situations where they could be considered suspicious and you need to reconsider maintaining the relationship. So yeah, how do you manage that friction when you need to change the level of the risk level of the product that your customer's applying for?
So, there's a couple different pieces on that one. And I think, it's going to probably come back to the communication that you and the sort of of how and why you've asked for that information. We have several clients that will level up into a government ID verification. And it's because they hit a limit in their account, regulation demands it, or as the question states that, they're going for a new product, which warrants a higher level of pretty much of a CDD workflow. And so, the piece there is it's that how do you communicate the purpose of why and where, and setting those expectations sort of up front. And again, I think then if you have your users asking those questions, maybe going and looking at when you first started collecting that information, did you prompt them of why you're collecting it, and doing that a bit more of that education through that onboarding experience, so that when they come back the second time to do it, it provides a it doesn't come as much as a shock, or you get the questions of why are you asking for this information again? It comes down to that sort of user experience.
Yeah, I agree with that. I mean, it's really, you're absolutely right, level setting the expectations up front and that communication and education. The worst thing you can do is having sloppy or multiple communications with the customer. And so if you were going back for information on several fronts, or just making so much friction in terms of so many different levels, and so many different trigger points, that's going to really agitate the customer experience. And so I think that's very important in terms of how you communicate it and your level of transparency. And again, but it's at some point, if the customer is still concerned or still doesn't want to go forward, then it can lead to be a red flag.
Mm-hmm. And one, I think, final question now from our audience. Can you speak to the advantage and current usage of these technologies for KYC and AML at the retail bank level, or any other institutional related use cases?
So I think it's an interesting place we are in the market at this point in time. Fintechs and tech first and tech only companies have been embracing this technology to be out on the front foot, as they didn't have a branch to onboard their customers into. The shift that we're really seeing now is the uptake for this is happening at a rapid pace within the large retail banks, because of a lot of things that we've talked about today. They need to be competitive because the fintechs are putting pressure on them for the millennial wallet and user base, and they also need to just move with the times and take advantage of these new behaviors with these supercomputers that we call phones that go everywhere with us. Most people don't spend more than 5 feet away from their phone only about 5% of the day, right? Last time I was in a room, I asked the room last time they left somewhere and left their phone somewhere and didn't have an anxiety about having their phone with them. No one raised their hand in the room, and so I think that this is going to be this adoption is going to move in this direction. Capital One has been doing a really big drive and marketing, saying you can open a bank account from anywhere in 5 minutes. And they've been using this technology in the market and they're one of the I would say leading institutions that's doing this. But everyone's trying to get there now because they kind of have to.
Yeah, I agree. I mean, this is eventually going to become best practice. Of course, the analogy is that it takes a lot longer for a large tanker ship to turn than one of these smaller and nimbler types of companies. And the fintech space has been really out the forefront of this. And it's been easier, and you also had more of the talent internally, and so being able to manage this and have data scientists and engineers and folks that can also help work with external providers and also build things internally and do a lot of different unique things. It's really been able to move the needle quite a bit. I think you're going to see it definitely because of the advantages and the efficiencies. You're going to see it within the retail banking space and the larger institutions. It's just going to take a little longer to get there.
Great. Okay, I think that's all the questions from our audience. So I think we can wrap up now. So I think on behalf of everyone that's dialed in today, I'd just like to say thank you to Parker and John for some really interesting insights and some great conversation there. And to everyone that's dialed in, as I said earlier, please do look at the attachments and links, and there's plenty more material to give you a bit more background that you can download from there. And we will be in touch to follow up. And please do feel free to reach out to us if you do have any questions, and we'll of course be happy to talk more. So with that, I think we'll wrap up, and thanks everyone for joining.
Thank you.